Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. "1 p.m. on the west coast of Florida,
Oh, I see what you
but
did
on
there.
the east coast of the United States. For a special edition of Market Call, Nathan and Guy Adami coming to you live from the CME GFLC event. Dan, what does that stand for?
Global Financial Leadership Conference. I don't know why you and I are here.
They needed, I don't know. I mean, they wanted us
Yeah.
down here. We're friends with Terry. We know Anita and Colleen.
Yeah.
It's exciting. We're here. This is our 4th year, I think.
Yeah, it
year,
is.
Which
It's
is really
great.
exciting.
Wait, by the way, great event. You and I have been doing this for a while. This one is special. I think it's the first one in a couple years where they brought all these amazing like financial services folks, whether they be regulators, CEOs, trader types, and all that sort of stuff. And I think you're pretty geeked up. There's a couple keynote speakers other than you. We have
Well, I have no interest
we
in
have the
myself.
Vince Vaughn,
Vince Vaughn,
which
that's
is
it.
and George Bush, George W.
Yeah,
Bush.
Vince Vaughn is good.
I'm interested. I'm interested to hear what George Bush has to say. George President, former
Yes,
president.
absolutely.
And then I'm interested. Kalima Croft's going to be here. Your buddy the
Anthony
Mooch is going to be.
Scaramucci's gonna be here.
Lots of good folks.
Doug Stifu, the owner of the Florida Panthers.
And then they have a golf pro-am that Danny Moses is going to be representing us for. They raise a ton of money for St. Jude's. So we're going to be participating that as donors. Danny's going to be participating as a golfer.
Danny's going to suck. He's going to get the yips. I'm going to get in his head. It's not going to be good.
The
But
yips.
there is a lot. So Friday, let's go to the rundown first.
Yeah, let's
because,
do that.
you know, Amanda likes when we go to the rundown. Strategist bulled up on 2025. That's in the form of Brian Belsky, Morgan Stanley, and Goldman Sachs. We'll discuss. Time to buy gold. Yes, we talked about that last week. Nvidia's moment of truth. They report this week in Wednesday, I believe. And a little audience Q&A because we do that, Dan.
Yes, we do. All right. So you said this Friday afternoon to me when the market like literally didn't have much of an uptick, I think, all day long, led by the NASDAQ to the downside. It was made worse by just that guidance that AMAT gave. And let's just be clear, AMAT is an equipment provider. They sell to the folks that make the chips, right? So that would be an Nvidia and an Intel, AMD, that sort of thing. So in the last month, we've had really bad forward guidance from ASML, really bad forward guidance from AMAT. The fact that AMAT guy was taken down 9% on Friday, it tells you that investors are not waiting around for this trade to get a second leg. What is this trade? It's the generative AI sort of trade. We put this chart up there last week with AMAT, and we basically, I think Amanda did it. We made a head and shoulders there. That was the neckline. A break below there, you know, that support was really important. And now it's resistance.
No, so right. Past support becomes resistance. So that's the AMAT chart. And real quick, let's go off script a little bit. Let's look at a Micron chart.
Yeah.
Because the last time Micron reported, I think the stock closed that day around $92. It traded up to about 118 to 120. We talked about it on this show, on Fast Money, on a number of different shows that we sort of understood to a certain extent the rally, but it was probably going to be short-lived. And it's round-tripped the entire thing. So, you know, I look at some of these names, ex-Nvidia, and say, you know what, this tech trade really isn't doing as well as people think.
Yeah, go back and look, and maybe Amanda can blow it up, maybe make it 3 months there. So look, you see that 150-day moving average. That was resistance, right? And then look at that move, that gap. You and I actually didn't understand the gap. We were watching it on Fast Money that night as the quarter came out and that sort of thing, and we both thought it might fill in that gap. Well, it did do that. It went back. It challenged that opening high from that gap, you know, sold off again. Now we're below that sort of support level, and it kind of has the feel, Guy, that it could go back to
100%.
mid-80s.
And this is one, if you go a longer-term chart, you'll see it looks like you had this big move off the bottom, but this stock is nowhere. There you go. I mean, so you see where that prior high was. So, again, you're going to say you're cherry-picking, Guy? A little bit.
Not really. No, we're trying to put together a little mosaic here, Guy.
I'll add to this mosaic real quick. Throw up a Qualcomm chart. Now, this is one that I got dead wrong because when they reported, I want to say early last week or the week prior, it doesn't matter. I thought there was a real good chance the stock, given the report, given the valuation, would trade back to those prior highs of about 220 that we saw late spring, early summer. It looked that way for about, 24 hours. Yeah. Gave the entire.
It was above, it got above that kind of 180 or so level. The only thing I'll say is make this a 1 year. You know, I kind of don't mind this here for a whole host of reasons, meaning like I'm kind of inclined to buy it rather than sell it. Now, this doesn't look that much different than the AMAT, but, you know, one of the things I keep seeing on whether it's, on the NFL last night or whatever, they keep advertising for these Copilot PCs. Okay, so Qualcomm Snapdragon chip goes into those. So if you're looking for another way to generally, play generative AI, that might be the next leg of it. Because one of the things that we heard from an ASML when they finally reported last week, they gave that really bad guidance a month ago, was that PCs might be bottoming, and the next leg of the PC trade might be Copilot PCs. What does that mean? It means that you're going to have better processing to do generative AI tasks on a PC. That could cause an upgrade cycle. So to me, that's probably one of the reasons why Qualcomm remains range bound and has not broken down.
That's fair. So let's take a look. We've talked about the strategists. So let's look at this great slide that Amanda created. The gentleman on one side staring straight into the camera, that's Brian Belsky. By the way, we had Brian on the podcast a couple weeks ago, I believe, and Brian has been bullish, and he's been right. We had him on our podcast, I think, in the spring. I think it was in March, and he sort of outlined what he thought would happen in the year, and it's come to fruition. He just put out his price target. The other good-looking gentleman, of course, that of Mike Wilson. So analysts are, I don't want to say they're tripping over themselves. That's not fair, but you're starting to see some projections for next year in terms of price levels for the S&P.
Yeah, listen, and I got an email from somebody who's a listener of our show. I'm sure people are talking about it and saying, Mike Wilson, he'd been bearish for a long time. He got a lot more constructive back in May. Listen, that job being a strategist is a hard job. And one of the things that we've said, Mike comes on our podcast every quarter, the On the Tape podcast. He's very nuanced. You can't take a 5-page note that he puts out Monday and just because he's got an S&P target below where it's trading and say he's just a bearish guy. I mean, he's talking about rotations. He's bringing up multi-asset class and the like. And I do think that juxtaposed to Brian Belsky, who also comes on the pod every quarter, he's made this point. It's been a good one over the last year or so. He's like, forget about all the macro. He's like, so many equity investors get so caught up in every data point, whether it's employment or inflation or this and whatever. He's like, listen, this is the course that he believes that you're seeing earnings trajectory go. And until so I love both of these guys, and they can both actually be right on some of the same things, if that makes sense.
And the overarching point is people take the headline and they disregard, to your point, the nuance and sort of the minutia that's in these notes, and they're doing themselves a disservice. But with that said, I mean, that's sort of the society we live in. People just give me the 9-second headline, and we'll go, and then we'll make our decisions based on that. Let's look at the futures through the lens of
the S&P. Yeah, baby.
S&P.
The 100 E-minis here, the 500 E-minis.
So here you go. I mean, this has been in place for quite some time. I mean, quite frankly, I don't like the price action recently, and I still think there's a chance for this downdraft by the end of the year to the 150-day moving average. And today, by the way, does nothing to change my view. I thought Friday was a really important day. And again, you saw hints of what potentially could happen. It was reminiscent of what we saw on August 5th. And those days are few and far between, but you see how quickly things change. Dan.
Yeah, and I guess, you read a couple things over the weekend. Friday's close was pretty bad, right? And you say to yourself, well, the headline was the Trump trade turns into the Trump fade, And I think what's most important about that, it probably, the policy stuff here and there, it's a headwind to this one sector, it's a tailwind to the other sector. It probably kind of just cancels each other out, if you will. And there's a couple things going on today, and we'll talk maybe a little bit later about the Tesla. You see a headline. Again, this is the transition. They don't even have these teams in place. You see a headline that says, well, the new Trump administration is going to be very, they're going to be, easy on regulation as it relates to autonomy. And then Tesla gaps up 8%. It gaps up, $100 billion in market cap. That seems kind of goofy before we know any policy. And then the flip side of that, you see an Uber, getting hit really hard. I look at this S&P chart. You can see the trend line. You can see the trend channel here. We got below it very briefly to the start of this month. We kind of rallied, made a new high, and here we are below it again. You tell me, Guy, that breakout level in the S&P futures here was what? 50, I don't know, just below 5,800 or something like that. So, might that be a level where you find a little support or the low from earlier this month? Maybe, but I could see this thing kind of moving its way back towards 5,600 for no reason other than to reset, you have a little bit of uncertainty into the new year, and especially when you have all these strategists tripping over each other at 6,500.
Now that, the volatility, which was obviously sort of elevated into the election, I mean, that trade is seemingly off. So
15.5 on the VIX.
Counterintuitive. The fact that vol's come in a little bit actually makes it potentially more likely to have those types of events because the protection isn't in place. Let's quickly look through the NASDAQ, same thing, futures. It's going to look similar. But obviously, you have something that's going to happen this week, which is going to, I believe,
What's that guy?
dramatically change the course. And
What's that
comes
guy?
in the form of Nvidia, as you know. And you can draw that uptrend. I mean, you see this clear as day. That prior low back in August, you draw the lines up. You can see we're probably about to make that third point of that trend line-ish. And we'll see how it sort of plays out. There you go, Dan. I mean, bang. Oh, there, man, it could draw that.
Yeah, I mean, listen, what's interesting about it is you had that low in September. So you have August, September, then you have the low from November, and we kind of bounced off it. I mean, man, to draw that line, it is pretty fascinating. As Carter says, the lines draw themselves. I'd also say that 2,200 level guy that we got to in July, and we finally took out one trading day for just one trading day.
Look at Amanda.
She's good.
I mean,
She's
seriously.
good. She's
she
good.
doesn't even feel well.
And she's playing hurt. Maybe draw a horizontal line from that July high, because this one feels heavier, guy. It just feels heavier than the S&P futures here. So this is one I think that, if it can't hold right here, you're going to have this thing at 20,000. And then what's the next level? You tell me.
See, it's a moving average.
There you go. What is that 150 right there?
Sort of predicated on this. We've talked about treasuries for a while. We have to bring them up again. I know that I'm a broken record with this thing, but I've been steadfast. And now this is probably the last couple of years that, yields are going to be a story. I will tell you flat out, I didn't think 10-year yields were going to go below 4%. They obviously got down to almost 355 or so. But the move higher that we've seen has been extraordinary. And here we are sort of approaching 4.5%. Again, optimists will say they're going up for the right reasons. People like me will say they're going up for the wrong reasons. People that are playing it don't particularly care. They just know that yields are going higher. And at some point, it's going to have an impact. Now, Carter, if he were here, would say, you know what? We haven't done anything. We've gone up, we've gone down, we've been sideways, and rates are not a story. And I understand that line of thinking, but I do think the market's going to start to react. You get that point of diminishing marginal returns and yields. I thought it would be around 4.5%, and here we are.
Yeah, I guess the most important thing, and our friend Doug Cass over at Seabreeze, who writes for thestreetpro.com, has been bringing this up, and no one seems to care. As rates have gone higher, he's talking about the equity risk premium. It's basically the yield on the 10-year versus the yield on the S&P 500. And when that thing goes negative, it's generally not good for future returns. For stocks. And listen, a lot of this comes down to earnings estimates. And, I think that when you think about what these strategists are trying to do when they kind of calculate where they think the S&P can go over the next, 12 months or so, it really does have to do with what are S&P earnings estimates, how fast are they going to grow, what sort of quality they are. I read this over the weekend that, a quarter of the gains in the S&P 500 year to date are Nvidia, which is up 185 or so % on the year. And that's the sort of thing that you better have another sector or another handful of stocks pick up the baton, because if you think about that expected 13% year over year earnings growth for the S&P 500 in 2025, it's still predominantly made up of mega cap tech stocks, which are all wrapped up into the same trade.
Now you look at the dollar, because obviously if you look at yields, you almost have to look at the dollar, and you see the dollar, which has been strengthening in a pretty significant way. And it's interesting to me, and again, this is not political at all, and we've talked about this, but I think once again it's important to point out that I think people confuse any administrations want to have a strong economy with the subsequent. It makes sense that if they want a strong economy, they want a strong dollar. That's historically been the case. First time around, 2016 to 20, President Trump actually actively talked about his want for a weaker dollar. And I think the market is really not paying enough attention. I believe that he thinks our dollar is probably too strong. It doesn't make our stuff as attractive overseas. And he's going to start to once again talk about the dollar is too strong. He's going to want lower rates, which should theoretically make the dollar go lower. But it's that old adage, be careful what you wish for.
Well, I mean, that's exactly it. When we were just talking about expectations for earnings growth and it being, heavily loaded towards those top names are big multinationals. They probably get over a third, maybe 40% of their sales from outside the U.S. So when you have a dollar trading this way, it's really hard to kind of expect that you're going to have the sort of earnings growth that a lot of people expect. Doug Cass actually also sent us this guy, and I think this was really interesting. He's talking about estimates or expectations for earnings growth, and he's just saying that they've been actually coming down.
Yeah,
They've
they
been
have.
higher than expected. And when you see that on the out quarter, okay, so it's on a sequential basis, that's not great things to extrapolate to the next year or so, especially when you have a dollar yields, you have all these things going higher.
Well, because as earnings expectations start to come down, if the market is going to rally, it's on multiple expansion.
Yeah.
Which again, I mean, that might be fine. We had a whole conversation with Marko Kolanovic last week about
we did.
what his thoughts were in terms of the S&P multiple, and that sort of was counter to what Brian Belsky told us a week or so prior about where he thought the multiple would be and how it's not just a math equation.
Yeah, listen, I mean this, sincerely. I know that, on many times this year I've been pretty cautious on the market for a lot of the reasons that we just talked about, and it really hasn't materialized. If you look at those peak to trough sell-offs that we've had at certain times, I guess the August one didn't feel particularly orderly. The September one, we never made a new low from that August one. And I think a lot of folks obviously were anticipating, the sort of outcome that we had in the election. But it's funny that we talked about this. What did the market participants want? What do most investors want? They wanted split government, right? It didn't matter who won the executive branch. They didn't want it to go to be a sweep of every party or one party getting all of them. And so that's one of the reasons why I think maybe that whole idea of the fade. But when you think about the jockeying right now for who's going to be Treasury Secretary and who might follow Fed Chair Powell, I guess the Fed Chair Powell thing is later, but I just think this is pretty interesting.
It's interesting. It's about gridlock, right? And the market wants gridlock. It sounds completely counterintuitive, but in gridlock, things can happen in the market. Obviously, things might not happen in the government, but things will happen in the market. One thing that has been happening, and you've talked about it, the move in crude oil. So let's throw that up. And it's interesting, crude hasn't done all that much. And, we have Halima Croft here.
Yeah, we do.
And she's going to be on a panel tomorrow. I'm actually really excited for that panel as well, for all the panels. But, she obviously has a view on crude oil and the underlying different products off of crude and the ramifications. But, one would think as crude oil goes, so do some of these big cap integrated names. But real quick, you throw up ExxonMobil, understanding that effectively the stock market's at an all-time high. But you would think, given the move in crude, a name like XOM would not be trading particularly well. But here we are at 120 and change, and it's been hanging in like a champ. So I still am of the belief that certain equities in the energy space can do well in this environment. And Exxon is sort of, I think, showing us that can't happen, Dan.
Well, I guess the Chevron is the other one. If you look at the XLE and you think about, the two largest components, Exxon, Chevron, what do they make up?
ConocoPhillips is the
yeah,
third,
but they make up like 30% or so. And Chevron, which was trading very poorly just a few months ago, is now back up, at levels.
Starting to get its mojo.
Yeah, a little bit. I mean, I don't know enough about this sector to kind of be able to tell you why these stocks would act so contrary to the commodity. And I know that this is a space that you look at pretty closely, but this thing's up 8% on the year now. This is the Chevron. I mean, I don't think these things are breaking out anytime soon, Guy, but like, for instance, the fact that they're not falling out of bed, I think it's good going back to that whole discussion about what about forward earnings for the S&P 500, because these are also two contributors.
Look, part of this move is, again, candidate Trump now being President-elect Trump. I think people are saying, he's going to be very favorable to the energy space. The irony, of course, is that under the Biden administration, I mean, the energy, if you think about it, in terms of some of these energy stocks, they all did pretty well. But that's neither here nor there. Gold is something that, the move lower made sense over the last week or so. We talked about it, Dan. Bitcoin was getting, obviously, a lot of investment dollars. Yields going higher historically are not good for gold. But I thought that gold would hold the trend line. It didn't. But here we are, and I think you have a trade on the back of this, but gold's performance today speaks to the fact that maybe the washout is done.
Yeah, it has a lot to do with the dollar, and if you think that the dollar gains are kind of, abating a little bit, and we're likely to see a back and fill, well, that's what we had. We had a back and fill in gold here, and so to your point about, I would love for it to get to that 150-day moving average, but, as Carter says, is that, support is not like this exact, spot on a chart. Sometimes you can fall into it and go through it and then kind of find its footing. I think today's rally is definitely sort of interesting to me because it feels like it did put in a near-term bottom. And so if I wanted to trade this from the long side, I'd look to buy this around 26.13. I'd put a stop down there at 25.40. That was the recent low here. I just don't want to be long this thing. If it goes through that, my initial target would be 2,700. That's the level it broke out from just a couple months ago, or about a month and a half ago. And then it broke down from that level a couple weeks ago. So 2,700 would be my first target. And then the prior all-time high at 2,800 would be my next target there. So again, I would want to use a trailing stop if this thing starts to head towards 2,700. And you guys can look at the charts. One of the reasons why we look at charts as it relates to a commodity like that, these are very technical trading. We want to put these stops in at levels where folks are not just probing for them, they get to them, and then they, when I say probing for them, a lot of these traders, they know where, the other side of it, they know the levels here. So again, we want to use stops when we're trading futures.
And they know what levels are going to trigger either buy orders or sell order, buy stops or sell stops. And you're right, the market probes. It's interesting now, this is revisionist history, but I think this is just important to point out. Newmont Mining reported a couple weeks ago, and by the way, at the time, gold was on its highs, and I think Newmont was trading north of $56 or thereabouts-ish. So throw up a chart. The move off that earnings report was shocking to me on the downside, and I think it was a couple Thursdays ago, if I'm not mistaken. And I said to myself, man, that doesn't make sense given where gold is. And then not only did it not bounce, but then then went significantly lower on the back of gold. But what I sort of figured out in retrospect, and again, this is one of those things you sort of store away for the next time. It doesn't help us now necessarily, is, I think Newmont Mining was the precursor of what the gold move is going to be. It's somewhat counterintuitive. I mean, typically gold, the commodity leads the equities, and this time the equities sort of led the commodity. So I guess my point is, you're at huge support here in Newmont Mining. If you want to throw a chart up, we have it. Throw that sort of that horizontal line across. So if you start to see Newmont start to bounce like I think it will, I think that's only going to help the gold trade you've put on now.
Yeah, I think that whole 40 to 42 range where we are trading right now seems like pretty good support. And if you wanted to buy this, I'd just put a 40 stop in to the downside. And listen, does this have the potential to gap? Yeah, that move from October 24th following earnings from basically,
that was unbelievable.
How many year high was that, Guy?
It was a multi-year high.
Going back to 22.
We were nowhere near the prior high. It definitely felt like, to me, and I'd been saying it all the way, that it was going to continue. That obviously didn't happen. But, it's just interesting to look. You always want to go back and look at things. What did I miss? And then you try to remember for the next time. If you were to see something like that, you say, okay, I remember when this happened in Newmont 3-4 years ago, 3 months ago, whatever it is, and then you can make decisions based on that.
You're a see something, say something guy. I mean, just to be really clear, earlier this year, the stock traded at 30, okay, and then it almost ticked 60 just a few weeks ago. Yeah, so it was a double. I mean, that's a pretty aggressive, 59 to 41 pullback, but I like the idea, if you want to be long gold, the idea of maybe taking a shot on this one and stopping it at around $40 definitely makes some sense to me, Guy. We got to look at
levels real quick. Your levels in your trade, if you want to put that slide back up, Amanda, make a lot of sense, and we'll put this in the show notes. I think if you're looking to make a trade here vis-a-vis futures, these levels, given itself, to your point, you would have loved for gold to have traded down to the 150 and bounced. It didn't, but you don't always get what you wish for, Dan.
No doubt. Really quickly, you mentioned Bitcoin before. We got to talk about this one because, again, this is definitely a Trump trade. If you think about it, they've talked about making a Bitcoin reserve. That would obviously be something very bullish for the Bitcoin. That breakout is pretty epic. And, the fact that it's been able to consolidate in and around this 90,000 level, there's really no resistance above. A lot of folks keep saying, well, that 100,000 round number. The thing that's so interesting to me, Guy, about Bitcoin is that so many of the other sort of use cases for maybe some other cryptos and the like, they've kind of all fallen by the wayside. This has been such an outperformer. This is the one that I think has probably 80% of the entire market cap of the whole space. And, so for me, who knows where the hell this thing could go? It's, half of it is probably just kind of bottled up with whales. If you have governments that are buying this thing, I don't know why, but if you have a whole host of folks who look at this thing as now a macro risk asset, especially at the time where, gold, who knows, some of the correlations have kind of broken down with gold. This thing used to be very correlated to the NASDAQ. It seems to be the opposite right now.
I've said it 1,000 times. I don't necessarily understand it. I think I understand how it trades, but I'll also say this because I do believe this is important. Listen to Jerome Powell, watch and listen to what he says. I don't think the Fed is going to be as dovish as the market wants. A less dovish Fed, I don't think it's bullish for Bitcoin. I think Bitcoin obviously is rising for the reasons you said, but there's a long way to go before where we are now and the U.S. government creating a Bitcoin reserve. So I understand the market's front running that, but we have a lot of chapters left in that story, Dan.
Yeah, so a name that we're gonna have a lot of chapters with left also is Nvidia. We're gonna hit that on the way out, guy. Let me just hit a couple quick questions here, and I think it's interesting. Here's one in Apple. Let's go this. Who had this question here? You guys can find this thing, right? It was basically saying that it's up $4.50 today. There you go. Why? Let's just pull up the chart for a second. It seems to be, really consolidating this 220 level up to about 240. You see that August low that it made there. It basically traded below 200 briefly, guy. It kind of round tripped that entire move from the June 10th WWDC. This stock to me is unusually strong, especially when you consider some of the reasons why folks were buying it over the course of the summer. A huge, upgrade cycle in around the iPhone that was released in late September, and then in October you're going to get Apple Intelligence. Well, it doesn't seem that the upgrade cycle is materializing right now, and it doesn't seem people are doing it if they were to do it for Apple Intelligence. So I don't know, man. Why does this stock kind of hang out at 220? I mean, maybe people think it's reasonable on valuation relative to what they're going to see in 2025. It just doesn't make a whole heck of a lot of sense.
No, I mean, and the question is predicated on why is it up today in the manner. I mean, it could be as simple as, Nvidia's down. We're going to talk about Nvidia. Maybe it's this dollar rotation thing out of some of these high-flying semi-names into an Apple. I mean, Apple historically has been this sort of flight to quality, flight to safety. And I think maybe you're seeing a little of that today. I think that news over the weekend, again, about the chips getting overheating and stuff. Maybe that spooked some people. We're going to talk about that.
All right, let's hit this let's hit this. Okay, so over the weekend there was a headline that the Trump administration might be a lot more favorable from a regulatory standpoint to autonomous driving. Autonomous driving is really important to Tesla's future. We know that this is one of the things that most of these Uber bulls, and see what I did there, Uber bulls, they're basically placing a huge emphasis on the company's ability to get to full self-driving and then ultimately autonomous fleets and the like here. So the stock has obviously just been a rocket ship since the election. We know that Elon Musk has been probably one of the biggest supporters of now, future President Trump, if you will. And so those sorts of headlines have gotten this stock really excited. It opened up 8% or so today, guys. It's up a little less than 6% right now. But the knock-on effect, if they want to pull up Uber for a second, we have two questions here. So let's pull up the chart and then let's kind of focus on a couple of these questions. And you can see them there. This is from Steve Z. Thoughts on Uber? It's getting slammed today. Christopher Landry also thoughts on Uber, and I think there was another one.
Yeah, we have a few questions. I mean, they can put them in the screen. I mean, we have a few questions about Uber. I got to tell you, it does make sense, and it's interesting. A couple weeks ago, we do this thing on Fast Money, what's your most important chart, and I've used IYT, and the three biggest components of the IYT are three U's. It's Uber, it's Union Pacific, and it's UPS. And, I pointed out that Uber had this huge run, and it was probably getting a little bit ahead of itself. And given its weighting in the IYT, I thought there was a good chance that would come off. That actually came to fruition. But your point, I think, is well taken. Now, we have gone through the 150-day here. But in terms of a trade, I think the more interesting trade here, in my opinion, is to be long Uber rather than to be long Tesla.
Yeah, so the idea there is that Uber is partnered with Google's Waymo, and Waymo is right now, it's operating in San Francisco, in LA, in Phoenix, in Austin. They're going to be rolling out more over the course of the next year or so. And I took them, man, when I was in San Francisco. It's a pretty great experience. So again, this would be very competitive to what Tesla wants to do. I'd take the over, no matter what, about the regulatory environment, about when Tesla is actually able to kind of have a fleet of autonomous vehicles out there. Very complicated stuff with the way that they've laid it out. And if you look at that move, that gap to new all-time highs that happened, I want to say a month and a half ago, that had to do with Apple after Tesla had this robotaxi event. People were not particularly impressed by what they had to say, and they basically made the decision that Uber is in the catbird seat to do that. Now, Waymo is not a publicly traded company. It's a division within Alphabet here. So to me, I think this is more interesting. But today's gap just speaks to the fact that investors, traders, shares or whatever, they think now that Tesla's going to be able to do this. Tune in tomorrow on the market call because I got a trade in Uber that I think is a really interesting way to play for defined risk. That chart, not great, guy. It's through that moving average. It's a big move on big volume today, but let's see if we can come up with a way to express it.
Yeah, and we'll see how it closes today. We got a bunch of questions about Eli Lilly, and you know, if you put up an Eli Lilly chart, you'll know that a number of times I've said that sort of this 760 level-ish is pretty big support, and we traded down there, I think, in August, and then we made a new all-time high, I believe, or close to. We traded back down and bounced, and now here we are through it. Now, it's happening for a number of reasons. The first and most obvious reasons are what's going on with this new administration. The market's interpreting as not particularly favorable to big cap pharma, so it's getting dragged down on the back of that. It makes sense. But also, quite frankly, they didn't do a particularly good job of explaining the quarter when they reported, and I think the market is now where you got the benefit of the doubt for Eli Lilly, valuation be damned. I think now people are taking a much closer look.
Yeah, it's funny, though, when you have this sort of price decline that you have and not the commensurate decline in earnings growth, this stock went from being very, very expensive at those highs to actually looking quite reasonable. You know, I think it got to almost 50 times earnings. Is that right here? So if I'm looking at, 2025 expectations here, I'm looking for 72%, or at least consensus is earnings growth. That's from $3.18 this year to $22.72 expected next year. Revenue growth expected to go from $45.5 billion this year to $58.5 billion next. So that's 28%. So now it's trading at about 24 times next year's expected earnings, 10 times sales. Very expensive for a pharma company. But again, if those forward estimates don't come down, and the other one is Novo Nordisk. This one has round trip, guy, if they want to pull up the entire move, and now this one is actually obviously a lot cheaper. This one's more interesting to me. So we're also going to look at this from the long side with the trade tomorrow on Market Call, so tune in for that.
Final question. Well, we have a couple questions, but SMH, and this is Mark Meisner, I think, asking about it. And, this is something we talked about with Carter I think it was last week, if you recall. So, SMH is at a pretty critical level here. And, again, I want to emphasize, I thought the sell-off would happen a lot longer ago, a lot sooner than it's starting to happen now. But here we are. You go back and look, and the real levels to take a look at ultimately sort of this 165 level, which, a year or so ago was this prior high we made into December, I believe, of last year. And then obviously we're off to the races. So SMH is at a pretty cute, and we're going to obviously, this is all subject to change, but we're going to know a lot more in about 3 days.
Yeah, so a couple of weeks ago, it was on November 12th, it was on a Tuesday, we looked at a put spread in December, just thinking that this is one that could actually cover you into the Nvidia earnings and some of the earnings that we were going to see from like an AMAT or so. So when the stock was 252, we looked to buy the December 245, 225 put spread. It costs a little less than $5. You see the levels to the downside. 220 is very near that September low. So we kind of have this one where we want it. And so I don't really see any need to kind of make any changes to this, especially into the Nvidia report. But the one thing I would say is that if you get this thing, let's say down $7 or $8 in the next couple of days, maybe prior to Nvidia's earnings, you might look to take half off. But this is heavy to me. It looks very different than the NASDAQ. It'd been a massive outperformer to the NASDAQ, largely because of Nvidia and Taiwan Semi. So again, this really hinges on what Nvidia has to say Wednesday night.
So if Amanda can go longer term, I thought it was December. It's actually July of 2023, where we traded up to about 165 and failed. Now, you need longer term than that, Amanda. You go back, the prior high was made, I believe, that's sort of the winter or so before. So that 163 level was, in fact, a double top if you draw a horizontal line. And by December of 2023, the SMH was cascading lower. Obviously, it got on its horse on the back of an Nvidia report, but people say there's no way we're going to trade back down there. Well, we'll see. But again, we're at pretty critical levels in terms of the 150-day, and that prior resistance, which held up into the winter of 2023, could in fact be supported sometime early next year.
All right, so we're going to be doing this every day for the next few days. This is Nvidia into the print, a 9% expected move, the day after. So that would be Thursday. It is pretty fascinating that this stock guy is going back and forth between every tick and Apple and Nvidia, which one has the larger market cap. Again, that doesn't really matter for a whole heck of a lot, but this is one of the last stories in and around tech where expectations, in my opinion, are really high. We talked about Apple before. Yeah, expectations are high because the stock still sits in there and we can't come up with too many reasons. Everyone knows why Nvidia's expectations are high. When you start to hear some of these things like we heard over the weekend, the information is talking about Blackwell, that's the kind of next chip set after this Hopper, and they're saying that, Jensen said this a few weeks ago, the demand's insane. But if you have a push out or you have any problems with this chip, it's overheating in these server stacks and this and that, whatever, and they kind of ever admit to that, I mean, that's going to put this stock at least on its back heels or so. Do I expect them to? Do you expect them to? No, they're going to kind of piece out that information little by little, but there's going to come a time where their bookings going forward, maybe some of these customers who are having some of these issues, they pull back a little. Maybe some of the use cases are not that well defined. Maybe the return on investment isn't there. That's going to happen at some point. Now, I've been saying that for a few quarters, but sooner or later, it's going to be one of those things where it's just a little too little, a little too much, Guy.
We have a lot going on today. We're down here at the CME GFLC conference. In a few minutes, we're going to interview Terry Duffy.
Yeah, we are.
That will drop later this week. We're back tomorrow with Market Call. A jam-packed week here in Western Florida on the Gulf Coast of Florida.
Nathan. Naples, Florida. Beautiful place.
Did you just dox us?
No, everyone knows.
By the way, we talked about, I can't wait to meet, George
Vince
Bush
Vaughn.
is exciting.
Yeah. Vince Vaughn.
Vince Vaughn is exciting
for you. All right. Hey, we got another one here. So after, we're just going to talk all day. After we have Terry Duffy, I'm going to be recording with Gene Munster, Deepwater Asset Management. We're going to do a big preview of the Nvidia quarter. We're going to talk about some of the regulatory environment, what we think for big cap tech. I think some of the folks that, the guy that has been listed for the FCC chair, he's a hawk on mega cap tech. So we're going to talk a little bit about how some of this stuff might shake out for some of the Mag 7. So tune into that. That drops tomorrow morning.
We got a lot going on here at Risk Reversal Media, but we'll be back tomorrow, 1 o'clock Eastern for Market Call. Enjoy the rest of the day, folks.
Thanks.